Hello everyone, happy to meet you all once again through this video, and today I'm going to talk something interesting about gold. One of my friends from India gave me a call and then said that, hey Sriram, gold has been appreciating a lot, and then in 2021 Jan, Feb and March we are seeing the price dropping for gold, and do you think it's the right time to invest in gold? So here's my answer. First of all, we cannot predict whether the price of gold is going to go up or down, or how fast it will go, or how it will fall. We can't predict. In fact, nobody can predict, right? So with that in mind, all I can say is whether gold is a real asset class and has it appreciated or not. That's one thing which we need to really think about. So what I did is I just did some analysis by collecting some data over the internet, and in general, when it comes to purchasing gold, India buys gold in US dollars. India does not have gold producing mines, so there is no internal production. So what we do is we import it from rest of the world and buy it in US dollars. So here there are two things which you have to consider. One is the purchase price as well as the US dollar exchange rate, right? With all that in mind, I took the data, let's say for 40 years here. I'll just zoom it. That is 40 years, 30 years, 25, 20, 15 years, 10 years, 5 and 1. So what I did is the gold price in India average 24 carat per gram gold rate, and 40 years before, that is in 1981, it was 180 rupee. And then as of today, I would say last 1 year, I can show today it's 4,839 per gram. That's in Indian market, right? Now when you check the US market, it is always traded in ounce or other metrics, but then I have converted that approximately into US dollars per gram. So it is 40 years before it's $16, and then now it is $52. Now here is something which you have to observe. If you really pay attention, last 10 years, so the rate in India, the gold per gram rate in India has almost doubled from 2,600 rupee to 4,800 rupee, right? Whereas in US dollar terms, it has not. So it is $45 to $52. So what exactly happened here? So let's look at these figure. I'll just color it in a different cell so that you can easily identify which cell I'm referring to. So in the last 10 years, the gold price in India has appreciated or multiplied at least 1.8 times or nearly 2 times, whereas globally in US dollar terms it's just 1.1, I believe. So if I put in decimal places, you can see what it is, and then I'm just using one figure now. Now, why in India the price has appreciated 1.8 times or 1.9, whereas in rest of the world, or specifically in US or US rates, it has not appreciated much? So if you calculate or observe the USD INR exchange rate right from 40 years before, let's say 1981 it was 8 rupee, and then it's currently as of now is 72, and then last 1 year, that is 1 year before, it was 75, that is March 2020. So what I did is I've just averaged the monthly the best US dollar exchange rate, and just for calculation purpose I have put it across. So the numbers may not be exact, but then we are looking at 40 years horizon, so it should be okay, any approximate number. So if you look at the exchange rate, that has multiplied by 1.6%. Like for example, in 1981, if you had $1 US, it would have given one, like last 10 years it's 1.6, whereas in 40 years it has grown by 5.58% compounded annually. So holding US dollars has given better returns than actual gold appreciation over the last 40 years. That's what this shows. I'll highlight it with blue. So if you have got or purchased a gram of gold 40 years before, and as of today it would have grown by 3% compounded every year. right? Whereas if you have got US dollars 40 years before, that would have grown by 5.5% compounded. Now forget about compounding and all these things. All we are going to say is there is something called as the exchange rate of the currency depreciation, I would say. Let's see it in the graph. I have prepared a graph here. So here's the thing. So what you're seeing is the blue and the red color, the gold price in India on the y-axis left side, and then on the right side you're seeing the US dollar terms pricing. So essentially, if you look only at the red, 40 years before, the gold was somewhere around $16 or something, and then it's reduced, and then there has been kind of growth, right? Whereas in India, there's always been a consistent and in fact exponential growth. Now, if you add the currency exchange rate to it, it makes all sense now, right? So when you add the currency rate, it's actually the gold price which is not multiplying or compounding in India, whereas it's added up with the depreciation of rupee or appreciation of US dollars. So the US dollars have appreciated or the rupee has depreciated, and since India buys gold in US dollars from centralized global gold councils, so then it adds up. So people who are buying gold in India essentially are actually or naturally hedging against depreciation of rupee, which is a good thing. However, you have to note that the actual gold appreciation is in the last 10 years is just 1.2 times, and the gold price in India is reflecting 1.8. So just don't go by actual price in localized places like India, Mumbai, Delhi or Chennai. Just consider the global aspects and then calculate the gold appreciation on that. However, if you want to invest in currencies like, for example, Forex, there are some products called FCNR deposits for NRIs where you can keep US dollars, let's say $10,000 or $20,000 in your NRE account, and that'll earn an interest of 1% or 2%, and you will always see that US dollar appreciates and rupee depreciates, right? So it's actually compounding a little bit more. Probably the total yield will be somewhere around 6 to 7%. It may not be exact, but that's the total yield on the investment which you exchange US dollars in Indian currency after 5 years or 10 years or whatsoever, right? So all I'm here to say is the gold price in India is not reflecting the actual price increase which is happening at the global levels. The price increase of gold is also including the currency depreciation or depreciation of rupee or appreciation of US dollars. And I'll also show one more image. Yeah, that's the image which I want to show. That's gold shares. GLD is ETF or gold ETF which is traded on New York Stock Exchange. And if you see in the last 10 years, that is, I have taken exactly from last 10 years, that is March 2011 to March 2021, 10 years, it's just 8%. It has gone up, and then there was a decline, and then there was a period like at least 7 to 8 years the gold has been like traveling between $100 to $125. That is GLD ETF. And then with the corona crash, that is exactly here, somewhere around here, the 2020 part, it actually broke the resistance. This is the resistance. It broke up and then it climbed, and then it has started to come down. With the influx of Bitcoin or with the current global happenings, if the bull market begins, I think the gold will probably drop to the same levels at this range, at least the GLD gold shares, what I'm talking about here. So at these levels it will be trading, unless there is one more stock crash where people usually hedge for gold against the stocks. And with Bitcoin coming in, we are not really sure whether people will by people what I mean is the hedge fund managers will consider to invest in gold or directly go with Bitcoin. As we have already seen, a lot of hedge fund managers have been parking at least 1 to 2% of the portfolio into the Bitcoin or cryptocurrencies, etc. So always don't look at the monetary value, that is 2000 rupee or 5000 rupee per gram, don't look at that. Look at percentage terms. What has been the percentage appreciation? And if you look at last 1 year percentage appreciation for gold, it's 10%, whereas over the last 10 years it's 8%. So gold is being considered as a hedge. When the stock market is likely to crash, people consider gold as a hedge. But with Bitcoin coming in, we are not very sure, or personally I'm not very sure whether people will park money in gold or they will choose cryptocurrencies. So with this, I'll end this video and hope this is clear that the idea what I'm trying to drive is the actual increase in price per gram of gold in India is not reflecting the true picture. What you have to consider is the US dollar appreciation or the Indian currency depreciation. So hope you found this video interesting, and looking forward to see you all again in the next video.